Welcome to This Explainer. You know, everyone is talking about the crazy housing market right now, but did you know that government policy might actually be the secret key to unlocking affordable homeownership? It's true. Today, I'm going to be your guide through the HUD Title I Manufactured Home Loan Program. We're going to look directly at the U.S. Department of Housing and Urban Development's own guidelines to show you exactly how the whole shebang works. So if you've been wondering how to actually navigate financing a manufactured home, well, you're in exactly the right place.
Let's just address the elephant in the room, the big question on everyone's mind. Is affordable homeownership even still within reach? For a lot of us, it's a huge dream, but with traditional housing costs soaring into the stratosphere, it can feel totally out of grasp. But as we dig into these HUD guidelines today, we uncover a brilliant, totally viable solution to the affordability crisis, and that is manufactured homes. Thanks to specific government-backed programs, getting the keys to one of these places is a lot more achievable than you might think.
Here is our roadmap for today's explainer. Welcome to Title I. 3 ways to finance, understanding loan limits, navigating leased lots, and qualification and next steps. Let's get right into it. Section 1. Welcome to Title I, your path to home ownership. Section 2. 3 ways to finance, unit, lot, or combination. All right, so under this program, FHA-approved lenders are actually authorized to help eligible borrowers finance their purchase. But before we look at the specific packages, it is absolutely crucial that we understand 2 distinct legal terms. Think of chattel kind of like holding a title to a car. It's classified as personal property. Fee simple, on the other hand, well, that means you own the real estate and the land entirely. And this matters because how your property is classified legally is exactly what dictates how your lender will structure your FHA loan. So you actually have 3 distinct choices here based on what you need. You can finance just the manufactured home unit as chattel, which means it completely excludes the lot. Or you can finance just the manufactured home lot itself. And finally, you have the combination package. Now, for a combination, the title for the lot must be owned by you in fee simple, meaning you own the dirt it sits on. In this combo scenario, the title to the home itself has to be in fee simple if it's classified as real estate, and the vehicle title is surrendered, or alternatively, it can just be treated as personal property.
Now, HUD isn't just handing out these loans blind. They want to make sure your investment is solid. I mean, picture this. You move in, and you know for a fact your home meets strict national installation standards, state foundation requirements, and it even includes a 1-year warranty if it's brand new. Plus, it has to be installed on a suitable site with adequate water and sewage disposal. These aren't just annoying bureaucratic hoops to jump through. They are excellent, built-in consumer protections for your peace of mind.
Moving right along to Section 3, understanding loan limits. What caps your financing?
So, your actual loan cap comes down to a mix of 5 specific variables. We're looking at nationwide limits, your minimum cash investment, your credit score, the maximum loan-to-value, and exactly how that LTV is calculated for your specific transaction. Factoring all this together is what ensures that the financing aligns perfectly with standard FHA safeguards and, of course, your personal financial profile. Let's zoom in on that acronym for a second, LTV. It sounds like a lot of jargon, but honestly, it's just the math your FHA lender uses to safely structure your loan, whether you're buying just the unit or going for the full combination package. It simply measures the amount of the loan against the actual value of the property. This protects both you and the lender from taking on way too much debt relative to what the asset is actually worth. Which brings us to Section 4, navigating leased lots, protections for your placement. Here is a huge benefit of this program. You absolutely do not have to own the land to get a home. Leasing a lot in a manufactured home community or a mobile home park is fully 100% supported by Title I. But, and there is a but, HUD requires an initial lease term of exactly 3 years. Not month to month, not a quick 1-year lease, but a solid 3-year commitment right from the start. On top of that, your lease legally has to guarantee at least 180 days advance written notice if it's ever going to be terminated. To put that into perspective, that is roughly 6 months of guaranteed runway to plan your life if things change. Now, you might be wondering, why so strict? Well, I absolutely love pointing this out, because these seemingly rigid rules, that 3-year lease and 180-day notice, are actually powerful consumer protections. They're designed entirely to keep you from being displaced overnight if a park closes or if the owner just suddenly decides to sell the land out from under you. These terms guarantee you have the legal right and, more importantly, the adequate time to figure out your next move. All right, final stretch. Section 5, qualification and next steps, closing the deal. So, how do you actually qualify for all this? It's refreshingly straightforward. You just need to meet standard FHA eligibility and credit standards and secure a suitable site, whether that's owned by you in fee simple or leased under those highly protective terms we literally just talked about. And crucially, this has to be your everyday principal residence. You can't use this program for an investment property or a summer home.
Let's translate all this into a game plan. Your path forward is super simple. Step 1. Start by locating and visiting a local manufactured home dealer or retailer. Why? Because Step 2 is to ask them for a list of specialized FHA lenders. Local retailers are absolutely the best resource for finding lenders in your area who actually specialize in Title I financing. And finally, Step 3, secure that suitable, compliant site for your amazing new home.
We have covered a ton of ground today, from understanding chattel versus fee simple to all those incredible consumer protections embedded right into the HUD guidelines. With these FHA-backed rules and flexible property options now completely decoded for you, I want to leave you with this. What is the very first step you're going to take today to turn your homeownership dream into a reality? And looking at the bigger picture, as traditional housing becomes increasingly out of reach for so many, could programs like this mean that the future of the American dream is actually a manufactured one? Thanks for joining me for this explainer, and definitely keep questioning the traditional path.